Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Let's talk about growth and income stocks now, shall we? Okay, I'm glad I thought of it. Let's bring in Alex Kolb, who's our growth and income stock analyst at Zacks.com, to do that with us because you do it so well.
Oh, thank you.
And because you're the only person who looks at growth and income stocks, but I don't want to get technical. One of the companies you brought here to talk about is the TJX Companies. TJX is the ticker symbol. And on the surface, it may not look like a discount retail company, but it is.
It is. It's one of those called off-price retailers, a discount retailer. They run companies like TJ Maxx and Marshalls where they offer clothing at a discount. Yeah, I know the Commerce Department came out with a retail number today that was below expectations. One thing that TJX has going for it and other discount retailers is the fact that they are off-price retailers. They're discount retailers, and you know, with the economic environment being what it is, these are the companies that will see higher sales than perhaps what the Commerce Department number indicates today. So let's jump into the TJX. As you know, I do growth and income, so I'm always looking at the dividend. This company, as you can see, has an annual dividend of 44 cents. That translates into a yield of, pardon me, almost 2%, 1.6%.
Okay.
And they reported sales recently, April sales, and the sales were strong, both global sales and in terms of comparable sales. Global sales were up 1%, comparable store sales were up 3% on a year-over-year basis. The solid sales translated into an increased guidance from the company and also higher forecasts from analysts, which is what I have on this slide here. In just 1 week, because these April sales were recently reported, in just 1 week, analysts bumped up estimates both for the current full year and the following year. As you can see here, for the current year went from 197 per share, from 191 per share to 197, and the following year went from 209 to 214.
It's all right. Don't cloud the issue with facts. That's what I always say.
Yes. Okay. And so, you know, analysts are upbeat on this. Discount retailer, I think that's good in terms of retail that is discount. So this is a good growth and income pick. I also want to just highlight a few strong fundamentals here. The return on equity is 41%. That's more than double the industry's average. It's a good ROE. Net profit margin is at 5%, a little higher than the industry's 3%. And as I mentioned earlier, it has a yield of 1.6, operating in an industry that's virtually not offering a dividend yield at all.
All right. And the today that Alex referred to as May the 13th, the day that we are recording this video, in case you're following the calendar. And then Tupperware Brands Corporation, TUP, the ticker symbol, is another company that you want to talk about. And I think we all know what they do. They're into plastic dishes.
Yeah.
Where's the growth? Where's the income?
Okay. Again, I'll go into income first here. We have a yield of 3.7%. That's a strong yield. It translates into an annual dividend of 88 cents. They actually just recently reported the quarterly dividend of that 88 cents yesterday morning. No, we're on Wednesday here, so Wednesday morning today.
The 13th again.
Yes. And so on the income side, it's strong. Tupperware also, by the way, you mentioned everyone knows that they're the container company. As individuals may not know, they also are in beauty care products. That's
really? I was going to ask you that. Have they expanded their product line?
Yeah, especially in that section, in beauty care, internationally in particular. And they recently reported first quarter results, which had strong sales, particularly because of what's being seen internationally. And they also made a point of mentioning that the emerging markets are doing really helping their sales. And so sales were strong with that for the first quarter. Earnings were also solid. The company reported 45 cents per share, which was 32% ahead of the consensus estimate. And analysts are upbeat on this one as well. The company hiked its earnings guidance when it came out with its first quarter report. The guidance is $2.16 to $2.26 per share. That's the company's guidance for this current year. And then analysts kind of nudged up their estimates to match that. Analysts are seeing $2.21 for the current year right now for Tupperware. And all these good results for the first quarter translated into a share price. On the slide here, you can tell that right a little bit before they reported, the company's share started soaring and jumped ahead of the market. Over the last 3 months, even though the market's been doing well, Tupperware's been doing even better. Over the past 3 months, it's up about 30%, whereas the S&P is at about 10% right now.
All right. Do you own either of these two companies?
I do not.
Check out more growth and income picks by Alex himself over on Zacks.com's homepage. In the upper right-hand corner, the current headline right next to the growth and income category is what you should click on to go to the current story and an archive of some of Alex's other stories. With Alex Kolb, I'm Terry Ruffalo.